What is that?
It's a form of the... I'm sorry, did I scare you? I didn't mean to.
That's okay. It's okay. Investment? What do you mean?
It's an old government bond, a type of investment. That means using a sum of money with the goal of increasing it in the future. Imagine you have some pocket money. Instead of spending it right away, you use it to buy something that might give you more money later. Buying shares, bonds, mutual funds, foreign currency, property, precious metals, works of art. All of these are things you can invest in.
And you are the chest of investments?
Exactly.
Tell me where to invest so I can become rich. A millionaire.
And what do you know about investments?
What do you mean?
Yeah, tough one. Let's start with shares, maybe? Mutual funds?
Mutual?
Bonds. I see. Let's take things from the start.
Great idea.
So, when you use money to buy shares in a company, you become the owner of a small part of that company.
Nice.
That way, you can get a share of the company's profits. Or you might make money by selling your shares at a higher price than you bought them.
I like that.
But be careful. The return of a share depends on how well the company is doing. If the company grows and is successful, your gains can be high. But if the company has financial problems, the return can be negative. That means you might lose a significant part of your money when you sell your shares. Share prices change all the time, and indeed sometimes very quickly, on the stock market.
Stock market?
The stock market is like a marketplace where instead of products, people buy and sell company shares every day. Prices can go up or down for many reasons, such as projections about the company's future, even mere rumors regarding the company itself, or its owner, or the economy in general.
That's just great, but don't you have a more stable and predictable way for me to become a millionaire?
How about bonds?
You think so?
Governments and companies issue bonds as one way to borrow money. When you buy a bond, you're basically lending money to a government or a company for a certain period. In return, they pay you interest on the amount you lent. This interest is calculated based on an interest rate and is paid either at regular intervals, for example every year, or when the bond reaches its maturity, its end date. At that point, you also get back all the money you had originally invested.
Wait a minute, me lending money to a company or a government?
Why not? Plus, you don't have to keep your bond until the end. They too can be bought and sold, just like shares. But unlike shares, bonds are usually more likely to return your money at the end date, although the profit is typically smaller.
I like the safety of bonds, but I also like the shares' higher profits. Can I have both in one?
The higher returns, you need to take higher risks. Now, let's look at mutual funds.
Let's. They have such an impressive name.
A mutual fund is an investment product that brings together money from many investors and places it in a diversified portfolio of shares, bonds, commodities, or other assets.
Diversified portfolio?
Yes, meaning it includes diverse types of assets. For example, shares of companies active in different sectors of the economy, bonds from various issuers, and so on. This diversification reduces the risk of loss. For instance, if you invest in several companies, potential losses from one may be balanced by gains from the others.
Ah, I get it. You just don't pull all your eggs in one basket.
Exactly. In addition, mutual funds are managed by professionals, experts who keep track of the economy and choose where to invest the money, always aiming for better returns.
That sounds very useful.
However, with mutual funds, you have to pay fees to the people managing them. And in this case as well, no one can guarantee that you'll make money or even get all your money back.
That's a good one too, but I still have one question.
Well, let's hear it.
How do I become a millionaire with all this?
The €1 million question.
Yes, that one. So?
I'm just a simple jest. I don't know the answer.
Oh, come on, of course you do. All right, maybe a lottery ticket is the way to go.
Huh?